What's going on, everybody? It's Kevin Trades here today, and I'm going to be bringing you guys a very special video on reading price action. We're going to go through every single key concept of candlestick analysis in order for you guys to begin reading price action fluently. Without further ado, let's get right into the video. So, in order to read a candlestick properly, there's four things that we need to pay attention to. A candlestick has four key components, which I'm going to list right here. Let's just make this green to make this a better example. This is going to be a green candle. So right here we have a green candle. Alright, let me just shade this in as well. Right over here, what we have is called the open. Right over here is the close. Over here is the high. And here is the low. So, why is this important when we're reading price action? The reason why all these four key components right here are important is because it tells us how the candle is moving, right? So if we, for example, open right here at 100, that's the opening price of the candle, right? And we come down, let's just say we drop 50 cents, so we're at 90.50 now. That creates the low of the candle, right? And as buyers step in and we push the candle up, we start to keep going up, right up here at the close. Let's just say this is going to be 105. And then we continue to make another high, so let's just say that this is 106, right? And then we come back down and close, right? So we closed at 105. We made a high of 106. We made a low of 99.50. And then an opening price of 100. What this candle is basically representing to us is that we open at 100, we dropped to 99.50. Buyers were showing that they had strength and pushed it all the way up to the high at 106. And sellers couldn't push it down enough for it to close below 105. Right, so this is indicating to us that this candle here has a lot of strength in the upside. And it's literally going to be the same thing for the downside. So let me draw it for the downside for you guys. So right here, we're going to have a red candle. Right here, we have the wicks. Now, it's the same principle as the green candle right over here. The green one obviously indicating bullishness, and the red one indicating bearishness. Let me fill this in real quick. So right over here, what we have is the open. For the red and green, for the green and red candles, it's basically flipped. So how the open is at the bottom on the green candle, it's going to be at the top on the red candle. So this is going to be the close of the red candle. This is going to be the low still, and then this is going to be the high. Right? So it's the same principle as this example right here. What we did was, let's just say we opened at 235.20-ish, 235.30, 25, whatever. Then we pushed up a little bit, created this high at 235.57, right? Couldn't hold it, so we came back down to this low right here at roughly 233.50. Then we slightly came back up and closed at 233.87, right? So what this is basically telling us is that we opened at 235, 28, 30, whatever, pushed up a little bit, sellers stepped in and showed that they were aggressive, dropped all the way back down into this low at 233.50, and slowly came back up and closed at 233.86 because the buyers weren't strong enough to push it back up. So that's the first step into truly understanding how candlesticks move. Once we understand how candlesticks move, it kind of gives you a better understanding of how to predict. I don't like saying predict, but react to the price action that's in front of us. Right? So let me get rid of everything on this chart right now. And let's just go into some examples on Apple here. So a candlestick like this one right here, this one, is telling us that we opened right at 228.21. Barely any selling pressure, and we just push all the way up into the high at 228.48. There was no selling pressure, so we closed at 228.46. This is a strong indication of a bullish candle. This indicates that there's going to be momentum to the upside. And what happens after this candle forms? A couple candles up, right? So while we're reading price action, just because the candle's green or red doesn't really tell you that it's going to be up forever or down forever, right? There's going to be green, red, sometimes green, green, red, red. You know, just, it's never just green, 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 red, 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 is what I'm trying to say. So when, let's just say you got into a trade right here on this green candle, and then you get this red candle right here. You shouldn't be scared at all when holding through this trade because, like we said, we opened right at 228.48, right, which was the high of this candle. Then we dropped all the way back down to this low at 228.37. And then we pushed all the way back up to this high at 228.49. And then we closed at 228.46. So this candle, even though it's red, it's showing us that buyers are still strong and aggressive. Because what happened was, this was originally a candle like this right over here. But what happened is buyers got aggressive and pushed it all the way back up. Right? And we'd use the same example for this, right? This was originally a really strong momentum candle like this candle right here. But what happened is sellers got aggressive and they pushed the price back down. And we closed at 228.50. Each of these candles is a 1 minute candle, meaning that from the open to the close, each candle lasts 60 seconds. Same with this red candle right here. We opened right here and then closed right here. And this candle lasted for about 60 seconds. If we go to the 15-minute chart, it's literally the exact same principle right here. Like we said, super bearish candle. But this candle, the difference between this candle and what I just showed you guys is that this is on the 15-minute time frame, showing you guys that this candle had an entire duration of 15 minutes, showing you that there's an immense amount of selling pressure within a 15-minute period. Now, I know you guys see all these candlestick patterns, like the bullish engulfing, the bearish engulfing, the Harami shooting star, whatever. Those names don't really matter. What really matters is how these candles are formed, and the most important things that you need to pay attention to is what I just told you, the 4 key components of a candle: the high, low, open, and the close, right? These candles, they tell you a story every single time. So if we go back to the 1 minute here, I'm going to show you guys the 3 candles that you really need to succeed in trading. So I'm just going to outline them for you, right? So these are the only candlestick patterns you need. I don't really like to call them patterns. I just like to read candles as candles because they tell us a story. A pattern isn't going to make you rich in trading, but understanding what the candles is going to tell you is what's going to help you succeed in trading, because you're reading the price action and what every single candle is telling you. When you can fluently read every single candle, it's going to help you react to what's going on in the markets and read the markets a lot better. So let's just go over these examples. Like we said, this candle is super strong, super bullish, indicating momentum. This red candle right here, same thing, super bearish, indicating momentum as well. Now these 3 candles right here are kind of what I want to get into more, because as you guys can see, this candle opened right here, made a high, and then closed right here near the open of the candle, right? So what is that telling us? It's telling us that even though the buyers pushed the candle all the way up, it came back down. So really, this candle isn't indicating bullishness or bearishness. It's really just telling you that there's indecision in this candle within the 60-second period. Same thing for this red candle. We wanted to push all the way down, but we came back up and closed near the open, right? So what is that telling us again? It's telling us indecision, because the buyers and sellers can't make up their minds where they want to bring the price to, right? So usually when dojis, or what people call it dojis, is pretty much going to tell you that there's indecision in the market and that either price is going to reverse or it's going to consolidate for a little bit. And what happened right here is we had a 3 candlestick consolidation before pushing to the downside. One of the most important things when it comes to the candlesticks is that the open and the closes are super important, right? The wicks as well. They show you that if a price is willing to be accepted at a certain area. And this is going to help you guys find levels on the chart, right? So if we are looking at Apple to the downside, let's just say we have this level here at 223.90. What is it showing us? There's wicks, bouncing, wicks, bouncing, wicks, bouncing, right? It's unable to accept this area of price at 2023.90. But if this candle, let me just draw it out so it's easier to visualize. If this candle comes down here and closes like this, imagine this is a red candle, sorry. That means that price has finally accepted that we are closing below 223.90 at 221, indicating that sellers have decided to break this area of consolidation and may want to push price further to the downside. Let me find a good example for the upside. Just right here, for example, at 227.84. What happens? Wick down here. Wick down here. Wick down here. Tried to break out, but wick down. Tried to break out. Barely a close above. So this is what we call a fake breakout, and then wicks down. Same thing. But right here, once we close above significantly by like $1, we have a little bit of a mini consolidation here, and then we start to push up again. So once it shows us that price has been accepted above 227.84, then maybe there will be a bigger push to the upside. This is how you guys can use candlesticks to your advantage in day trading. This is how you guys can find your levels, and this is also how you guys can read price action while you're trading. Price action is the only indicator you guys need to succeed in day trading, so don't go around trying to find some magic indicator that's going to make you profitable in 3 seconds or something. Because this is what I just explained to you guys is literally all you need to succeed in trading. I hope you guys enjoyed this video and that you learned a few things. If you guys enjoyed this video, make sure to like, comment, and subscribe to the Stock Hours YouTube channel. I'll see you guys in the next one. Peace.